Despite the doom and gloom, guess what? European stocks had a storming third quarter, and as fund managers take on more risk, can Q4 be just as strong? I'm Jamie McGeever and this is Market Pulse. Well, let's get out now to Chris Beecham. He's market analyst at IG. Chris, did you know Spain's IBEX up 12% in the third quarter, best quarterly performance in 2 years, and Italy is best run in 3 years. Can this relative optimism on those two countries continue?
It certainly is surprising to see that impressive gains from both those markets despite all that's hanging over them. But I think they'll struggle really as the third quarter gives way to the fourth. They've had a good run, but really the catalysts that were driving it are now priced into the market, and they might find it hard to make any further headway.
Out of those two, which one would you be a buyer of if you were forced?
Well, I think with all the pressure focusing on Spain at the moment, Italy is likely to escape some of the attention due to it being next in line. So it might sort of do well out of the limelight rather more than the IBEX.
On to the core markets. Germany's DAX was up 14% in the third quarter, and the core Eurozone Stocks 50 was up 10%. Again, quite impressive, but do you think that will fizzle out in Q4 as well?
Well, of course, the thing driving it really throughout the latter half of the third quarter was the expectation of an ECB action, and we got that. But the problem is that's now in, we've all seen it, and the question is now what next? And with Spain lingering over its bailout, the question really is, well, what can we see that will drive markets from here? And I don't think you're going to have quite the same run higher.
But if as you say, Italy and Spain start to peter out and the pressure returns to them, surely equity fund managers will be pushed towards the core markets.
I think they certainly find they rediscovered the attraction of Germany once again, it being the Eurozone's strongest pillar and the export market that relies on those emerging economies. So once you look between the three, I think Germany will once again emerge as the favourite.
What sectors should you be looking at in Q4? There's a lot of cash to be put to work. Our poll this week showed that investors are sitting on their lowest cash pile holdings, lowest in 1 year, which shows they are putting that money to work. Where's it going?
I think it's probably going to flow. Caution remains, so I think the flows will go towards the sort of the staple stocks, the consumer goods, the ones where people still need to eat and to spend money on their basics. So rather than the luxury goods, and also I think the mining sector will remain out of favour as we continue to worry about slower growth in China.
Are we looking at the same drivers of markets in Q4 as we had in Q3? I'm talking about the big macro European and global growth picture. Or might we see things like earnings or M&A starting to drive sentiment?
We have certainly seen a welcome return of M&A, obviously with the EADS and the BAE merger being the first one up on the cards. But I think aside from that, I think the focus remains the Eurozone crisis, regardless of when and if Spain takes a bailout. They'll just move on to the next domino in the system, Italy, and the whole delicate dance starts again.
Do you think that BAE EADS merger will actually go through?
It faces a lot of hurdles with all these various countries having their various says on these companies. I think the merger faces a number of issues before it can really go through, and it won't go through anytime soon.
Finally, let's talk about the US very briefly. Fund managers suggest to us that an Obama victory will be better for equities than if Romney gets into the White House. Do you share that view?
I think that's probably a very fair estimate to make of the situation. Really, Obama's much more of a fan of the Fed's policies than Romney is, so it would bode well for stocks, I think.
OK, Chris, thank you very much. My thanks there to Chris Beecham at IG. That's all, but do stay with Reuters when we'll be assessing whether or not French President François Hollande has broken his promises to the electorate after aiming for €30 billion in savings in today's budget. I'm Jamie McGeever. This is Reuters.